88.1. It's Zibby here, and I have a special guest joining me this morning. Our guest is Onome Ohwovoriole. He is an analyst with Money Africa. Good morning, Onome. Welcome to Business Express.
Good morning, Zibby. Good morning, Lagos, and the rest of the world.
And the rest of the world. All right. And we're starting off the conversation talking about Nigeria's latest inflation figures. Can we go straight in?
Yes, we can.
All right. So after 10 straight months of increase in inflation rates, it does appear that Nigeria's inflation rate has dipped to 21.34 in December compared to 21.47, which was reported in November. What do you think about these latest figures?
Okay, so I found, first it's just a slight dip, if I can use the term dip, because technically speaking, right, it's still increasing month on month. It's just increasing at a lower pace. So think of a speeding car, right? So the fact that the car goes from 100 kilometers to 80 kilometers doesn't mean that the car stopped moving, just moving at a slower rate. So I found I was somewhat pleasantly surprised because December is peak spending month. So that's when you have enough spending in terms of festivities and all that. So I'd say mildly surprising, but it is still an issue because 21% inflation, over 20% inflation. We are looking at inflation that has been probably one of the highest in over 5 years. So it's worrisome actually. It's not much to chat about.
Oh, wow. So it's not the good news that we hoped for.
Better. I'm expecting better. It's still a bit high.
Okay.
Because average inflation in Nigeria is, I think, 12%, 10-year average inflation. So we're still far away from what I would call a comfortable figure.
Okay. I want to ask this though. So looking at the cost of food, it's risen in the triple digits. Transports, it's risen in double digits, and even diesel, such an astronomical rise. Do you think that in some way this new or this slightly lower figure of 21.34% is an accurate one?
Okay, let's look at it from this perspective, right? Now, how do they arrive at the inflation figures? So you have a basket of goods and services, and you measure the month-on-month changes in price in that basket. Now, food takes up the lion's share of the basket because circa 50% is what the average Nigerian spends on food. So a lot of the money goes to food. I don't think that or you shouldn't look at it from the perspective of, oh, this has done maybe 100% plus and this has done 50%, 100%. Those are just select items in the basket. One. Two is remember that food prices swing up and down. So yes, you could have maybe 40 or 50% increase in a particular month, and by the next month prices have slowed down a bit. So you might say the basket by which inflation is measured is due for rejigging. I agree, but those select figures aren't sufficient enough to say that those numbers aren't correct or accurate. I think the numbers are actually accurate, but the inflation basket itself is due for rejig.
So how does this affect the regular Nigerians like you and I?
Higher prices mean that you have less in your pocket, right? And when you look at it, I tell people that, look, your inflation, your wages, right? Wages and salaries aren't increasing as high as they should, right? So for the average Nigerian, you probably have inflation rising at a faster pace compared to your wages. So it means that you're spending more and more on the same essential sets of things. You're spending more and more on food, you're spending more and more on transport, but your income isn't increasing that fast. So eventually you're going to be leaner and leaner in the pocket. and just generally, even from an investment perspective, at 21% inflation, and even if you're looking at what 12 to 15% inflation, it's a bit of a struggle to get investment vehicles that can catch up with that level of inflation consistently over time. So eventually you're going to have to choose between let me invest for investing's sake or let me consider other options. So really the struggle continues for the average Nigerian. Yeah.
To join the conversation, the WhatsApp number is 0809 4440981. And you can also tweet at smooth981. I've got a message coming through from Frank, and he says, good morning. The decrease is expected despite the fact it happened in December when spending was expected to be high. Inflation in the previous months leading up to December ate up customers' disposable income such that people were left with little or nothing to spend in December. All right. So Onome, I want to ask this though. What do these inflation figures actually mean for investment returns?
So you're left with two choices, right? The first is you'd have to either take more risk, right? Because if you're pushing 20-21% inflation, what does a 1-year treasury bill, which is typically the safest investment you can do in Nigeria, offer? Somewhere around 7-8%. So if the safest thing you can do in the country gives you an annual return of 7% and inflation is 21%, you are left with two options. The first option is to invest and be hit hard by negative returns by the time you factor inflation. And the second option is to say, take more risk. And maybe the third option, which I guess is probably the easier option, is to say, look, let me look at other currencies or let me look at other climes where I can easily invest and beat inflation. So really, I tell people that the biggest headache with Nigeria, one of the biggest headaches with investing in Nigeria, isn't just your unstable environment. It's just that you have such a high level of inflation that it's a struggle to retain the value of your money when you're investing. So that's the headache.
So is there a portfolio mix that in some way can actually protect the purchasing power of Nigerians?
I mean, it's a tough one. But if you look at things long term, right? I can argue that look, yeah, we have 21+% inflation today. Who knows? Fast forward 2-3 years from now, we'll probably come down to what? 16, 17. So in that case, maybe do what? If we are someone who has a low risk appetite, we do a government bond, do a treasury bill and say, okay, take the pain for a few years and expect that you earn positive returns plus inflation, once inflation starts to come down. But an ideal option is to have a mix of things. So you can look at dollar denominated investments. If you are savvy enough, you can look at the stock market because yes, it has its good and bad years, but net, you have a few select stocks that have been able to consistently beat inflation or at least are close to the 10-year average inflation rate. So a mix of things really, stocks, dollar denominated investments, and local debt, treasury bills, government bonds. Having a bit of everything will help. You can then rejig either month to month or quarterly or biannually or annually as the environment changes.
All right. I want to ask this, though. The Monetary Policy Committee is meeting next week. Do you think that these latest inflation figures will in some way influence their decision or on the benchmark rates?
I don't think so. And that's because, we are literally a close or a few steps away from an election, presidential election. So generally monetary authorities do not like to rejig too many things when you're so close to an election period. So it's not perceived as political anyway. That's one. Two is there's just a limit to how much they can raise rates because inflation is what 21%. If memory serves me correct, I think rates are around 5%. So at best, maybe I mean there's a there's just very little room to push the interest rates further up. And when you look at it at its core, what's driving the inflation in Nigeria is cost push, right? It's the cost of doing business, it's the cost of importation, it's the exchange rates and all that. So since your inflation is cost push, there's a limit by which you can use higher interest rates to control it or to manage it. And I think we're very close to that limit. So at best, I expect maybe a minor increase, but there's still a significant gap which they just cannot cover because you're not going to push interest rates in Nigeria to what 18, 19, or 20%. That's killing. So at best, I expect a tokenistic increase or a whole decision. Yeah.
Okay. Now, speaking of this Monetary Policy Committee, now Nairametrics has reported that the CBN governor, Godwin Mayfield, is back in Nigeria, and the DSS has denied reports that it raided the CBN in Abuja looking for him. What do you think about this?
I guess we just have to wait and see. Everybody just has to wait and see. Nigeria is an interesting country, right? It's an extremely interesting country. So we just have to wait and see how things go. I think next week, sometime next week. Monday and Tuesday next week.
Do you think that we'll see Mr. Mayfield at the meeting?
I'm a student of probability, right? And if you toss a coin in the air, you have two options. Option one is that he will be present at the meeting. Option two is he will not be present at the meeting. So we'll just have to wait and see. I'm unfortunately not a fly in either his room or his CBN office. So we have to wait and see.
Okay. I'm just curious about this though. Have the markets in Nigeria in some way paid attention to the events that are surrounding the DSS and Mr. Mayfield?
I mean, it depends on what arm of the market or what branch of the market you're looking at. So if you're looking at the equities market, it's pretty much on autopilot, except in the event that we have a change in CBN governor, except there's a banking policy that comes up that rocks the stock market, that rocks banking stocks, and banking stocks are a huge influence on the stock market. So I would say if you're looking at things externally, I mean, Nigeria is a country of one day, one drama. So really, it's not, I guess people are kind of used to it. But fundamentally, if you're taking a broader and long-term look, this whole saga, if I can use a term, isn't a nice look, because if I'm doing business and I have the CBN governor supposedly accused, I use the word supposedly because nobody has come out for him to say anything beyond the reports of the judge. No, it's not a nice look. I think that's a mild way to put it. It's not a nice look. But I think if you're Nigerian, you're probably used to the everyday drama, intrigues in the country. And that has ratcheted up in the last few months anyway. So you're used to it. So as an insider, you're used to it. As an outsider looking in, an external person, then it's not a nice look.
All right. Well, thank you so much, Onome Ohwovoriole, analyst with Money Africa. Thanks for being on Business Express with us this morning.
Thank you for having me.
And that's it for Business Express. Do stay with us. There's a lot more to come on Smooth Breakfast. Express on Smooth 98.1. Onome, have you been on Smooth Drive?
What Smooth Drive? The radio or the TV? Sorry, when you say Smooth Drive, the midday show. on the
No,
evening show. I've been on the
all
I've been on the
right.
evening show.
I just realized I remembered your name when I was looking at it. All right, that's fine. Have a good day.
All
Bye.
right. You too. Bye.